I'm Virginia McGathey here on the floor at the CME Group reporting on livestock. Today, cattle was firm. Seems those bargain hunters are stepping in to stop the slide from yesterday. The market really fell off. I think that was somewhat of a surprise. The turnaround Tuesday didn't work quite as well. But non-commercials are increasing their net long positions, and it's actually been the highest since March. Even though that we have been hanging around this higher area, I think that it's still pretty significant to know that they're increasing their net long position. So maybe we had a little bit, maybe yesterday was a little bit of profit taking, a few people taking a few things off the market. But in this day of electronic trade, sometimes the market can move pretty quickly or maybe even unexpectedly sometimes. But the significant cattle production, won't really come till tomorrow and Friday. And so that's when we get that kind of trade, we'll be able to get a little bit more of an idea of which way we're going to go. But the futures are holding up and still staying very strong. Now, the interesting thing is the feeders were higher, so that just gives you an indication on where we think we're going in the future. It really recovered from yesterday's sell-off, and didn't come completely like halfway back, but it definitely stopped the fall. And overall, generally, the expectation is that demand is going to improve across the board. Late summer surge is also a real possibility, and I think that if we get the momentum starts to build, that we could have a breakout on the upside. It's really kind of a wait and see game right now, and we keep bumping up into those higher numbers. But overall, we are very, very strong in spite of everything that's been going on all summer. Certainly with all the tariffs and all the challenges that we've been having, the live cattle and the feeder cattle markets have really held up pretty well. That's not saying very much for the hog side. The hog side have really been taking it on the chin. They fell again. It's a new low since May of 2017. I know that we talked last week, was the low in? Well, we don't know for sure. We thought that maybe that the selling was baked in, but I think that what's happening is you're moving a lot of traders and all the interested participants to the sidelines, and when that happens, it doesn't take very much for the market to fall. So it's been the 30th straight decline. It's down 25% from its high at 86 plus points on June, I think, 26th. So just in a month and a half, the market has just really gone straight down. And Monday was the turnaround that was very, very short-lived. I know that Monday we thought that maybe it's going to finally gain some strength, but this tariff situation has really hurt the pork producers a lot. And now I think that we're expecting that it's very possible that this could have long-term effects. One of the things as well is that as they maybe increase some of the hog slaughter, that just adds to the supplies that we have. And without our ability to kind of move through some of that supply, it's going to be very, very difficult to get these futures off the ground. So right now, it's definitely a wait and see, and we're just hoping for the best. So if we can get any kind of solution, or even the possibility of a solution, looking forward, that I know that we can definitely get a turnaround, but so far, nothing yet. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.